Hi, everybody. My name is Lee Honish. Welcome to Default Property Listings, or really the 20 things I see that are wrong with the market. The first 10 are things that I know are wrong with the market. The second 10 are things that I am keeping an eye on. I declare in my life things I know and things I think. So I'm going to talk about the market. I'm going to talk about what's coming. I'm going to talk about all of those things. If we have time, well, for sure, I'm going to show you how to get in front of them. We normally have time for that. As a bonus, I have marketing pieces for you. I have downloads for you. I have all kinds of stuff for you specifically. And I don't want to spoil anything or jump ahead. I'm looking down at you guys. I'm giving you guys a link early on. Okay. On that link, you will see 4 different things that should be of value to you. All right, I'm going to show you what it looks like. This is what the page looks like when you click on it, and I recommend everybody click on it because it's not on my main page. This is exactly what it looks like. On it is a way to invest in the program. It is 66% off. This isn't a sales pitch. That's just a fact. For all of you that have worked with me previously, there is an upgrade into the new program, but that's not why I'm telling you about it. If you don't go through these 4 links and use them, because I'm giving them to you right out of the gate, right? The first one is a Chicago Tribune article that breaks down state by state distress numbers. And that has great value to all of you, right? Every single state, it will tell you the programs, what's available, and how many people have missed payments. Great article by the Chicago Tribune. The second is state by state eviction, right? I'm going to tell you definitively that the moratorium is over. There are some places that aren't physically doing evictions, but the reason I'm giving you this, it is a state by state on whether or not there's any moratorium or restrictions in place. So those 2 things I think are extremely valuable for anybody who works in distress. You can click and download today's PowerPoint. Hopefully it's of value to you. I get that question a lot, or people are doing screen shares or screen grabs throughout. And I'm certainly going to talk about marketing and marketing pieces. No, I know we'll have time. If you click on the last one, it will take you to a place where you can download marketing pieces. They are the exact same ones we are going to talk about today, and I'm going to actually give you scripts with the marketing pieces. There's also, my podcast is located there, and there's a video from my last webinar. I will change this out with a copy of today's presentation for all of you right after the event. There you go. So let's get started. For those of you who don't know me, hi, my name's Lee Honish. I am the former head loss mitigator for IndyMac Bank's HELOC division. I'm not wired like the rest of you. In 1988, I wanted to go to cooking school, and my father put me to work doing REOs and foreclosures for Beneficial of California. To get to that point and starting into a life that I didn't really truly expect, you need to understand a little bit about me. I grew up, and still am to this point, actually a shy and somewhat of a withdrawn kid. Still, I prefer being alone. If you saw my studio here, it's me, my books, and darkness usually. I was actually at best a D minus student. I once got an F minus on an exam in the 4th grade, and I'm still talking about it on events to this day, if you're wondering if that has any deep lasting psychological scars. I'm also dyslexic. I still am, depending on how tired I am, considering that I normally get up somewhere between 3 and 5 because I have a hyperactive mind. It's really hard for me sometimes to stay focused. And I was actually, where I grew up, I was bullied and abused. The reason I'm telling you this, I am no different than all of you. I didn't really want to go into this particular line of work. I didn't want to do real estate. I never expected to have over 30 years experience working in a bank. I've worked for 3 major lenders. I've been a developer. I've been a real estate agent. I was the head loss mitigator at IndyMac Bank when the market collapsed. I saw the very first HELOC loss and negotiated it at IndyMac, and immediately took over the process of negotiating, mitigating, and creating protocols and guidelines that many of you on this call hate a great deal, as you should. We made it as hard as possible. What most people know me for, in 2007, I went out and I spoke on the topic of short sales. Many of the first events were with the blessing of IndyMac. They actually found it beneficial for their company. I spoke all over the country 3 to 5 times per week for tens of thousands of agents over a 3-year period. The tour was long, it was extensive, and it was rather insane. I did it all the time. I was viewed millions and millions and millions of times between videos and live events over that 3-year period. It spun off all the letter designations that you guys are aware of about short sales. But in 2010, I finally became an entrepreneur again, like all of you. 2007 to 2010, I worked for a company called Short Sale Genius, and they convinced me to go to work and speak for them and took me away from IndyMac Bank. I had not been a private contractor entrepreneur, just like you, taking risks in a very long time. Not since the 90s, prior to IndyMac Bank, when I was developing houses. So I opened my own company, and I created marketing of my own because everybody wanted to get in front of distressed homeowners. And that marketing, remarkably, over the next decade, got me named one of the top marketers in America. Somehow, magically, in a field that I didn't want to be in, really, I became the top marketer. I became a distressed property expert. And to be perfectly honest, it was amazing. I've spoken all over the world. I've been in front of hundreds of thousands of people, and I've been viewed millions of times. It doesn't matter where you start. It's, do you make the best of where you are? That is the way I operate these days. I'm a big fan of the 4 agreements. We'll talk about all that later on. But the reality is, I have not let my obstacles, right, keep me from being successful. When the market changes, I change, right? I'd love to tell you that there are points where everything was distressed property all along, and there are, right? Reality is, for as long as we have loans, there will be people who do not pay on their loans. So you can work distressed property. What amazes me is that people will only work distressed property when the market is depressed or correcting or changing. And the reason I'm telling you all of that, that's where we are. That's why we're on this call. Let me tell you the 10 things that I know about this market and that you should be keeping an eye on right now. Number 10, the eviction moratorium is over. That's why we started with the link. You can go state by state. You can see your own state, but the eviction moratorium is over. It's been over for a while. And astoundingly to me, this isn't bigger news, right? It was big news before it happened, and now it's not big news at all. In fact, there's no news. And in fact, we're seeing numbers of notice of default, notice of sales, evictions actually starting to happen and take effect on the market. Number 9, that is a fact that you need to be aware of. There are 1.6 million forbearance agreements. Write that down. 1.6. Did I finish reading all the books behind me? That's funny. Yeah, somewhat. They're not all mine, but I like used books. So, sorry. It's a funny question. Number 9 is 1.6 million forbearance agreements. Let's get this totally square. We just did this on one of my coaching calls. If there are 1.6 million forbearance agreements, you want to know what that actually means in English from a banking perspective? There are 1.6 million people in default. Got it? Unless you pay off that amount, and you did it prior to a couple of weeks ago, which they didn't, it's going to go on their credit. It is going to affect their credit. And the amount that they owe for not paying for the last 18 months of the moratorium for the pandemic, right, is going to physically go on their credit. At 31 days at 5 p.m., you're 30 days late. Okay, these people have not paid, in some cases, for a year to 18 months. The whole system has ended. You had an opportunity to pay back, or it will be reestablished onto your credit. FICO system has yet to come back online, but we'll talk about that in a moment. Number 8, 7.5 unemployment checks have ended, right? So I've heard 6, I've heard 5, I've heard 7.5. Here's the thing. The economy right now is structured on stimulus money. The government has kept the economy floating. If you don't know this is a little macroeconomic moment. For every dollar they put into the economy, it accelerated the economy by $4 per person, right? Nobody was saving up money. Nobody was putting it away for a rainy day. They were turning it around and they were dumping it right back into the economy. And that's why our numbers look so good. Those unemployment checks have ended. Those stimulus checks have ended. And we're going to start seeing the issues that happen when there's no free money handed out. Number 7, the interest rates are way too low. Okay, so is there a debate on this? I don't know why I get into a debate with people about this. We are at historic lows of the interest rates for loans, okay? The thing you need to keep in mind is the minute those rates start to go up, you will see correction in your market. And that's the way it is. I don't even, if there's anybody who's on a debate, no, they'll never raise the rates. I mean, you could be on this call, I suppose, and the values are way too high, right? So we have a supply and demand issue. I'm not blind. But because the interest rates were so low, because we had stimulus money coming, because there was an opportunity of basically taking free money, people kept buying. And it doesn't help that every investor on the planet seems to want to stick cash onto every available property. That has created values that are ridiculously through the roof. So here's a fun fact that I have not added that you guys need to be aware of. You guys are all in competition to get yourselves listings, right? I get that. Listing is king. The deal is the deal. The listing is the listing. And that's what's most important for you. That's where you make your money. Getting a buyer is not difficult in this market. So until these market corrections start to happen, right, nobody's going to fundamentally change over to working in distressed properties at all, but they will. Trust me when I say this, and here's why. 150,000 new agents have hit the market. I'll say that again. You're competing with another 150,000 real estate agents who, because the market is hot, they're jumping into the market. The whole reason I'm telling you all of this is so that you hear something that clicks, so that you fundamentally change, so that you can start working notice of default and notice of sale and start working in distressed properties. They are no different than anything else, okay? The homeowner's a little different. The scripting's a little different. The understanding and the care you have to provide for them is a little bit different, right? But for a source to get listings right now, there are 1.6 million people that are going to be in default. I've heard many, many, many estimates out of Black Knight, as well as many other people that are saying anywhere from 800 to 1 million of those are going to be sold. So the question I would ask anybody here is, do you know of a way to access 1 million listings where there aren't a lot of agents? Moving forward, renter evictions have started. The flag is up and away they go. This will have an impact, right? I think it's unforeseeable to get around it. So now you've got displaced people. If you're asking me what that does to the overall real estate market for loans for people like you, the thing you have to take into account is that it's perception. People who want to sell, right? We'll all get stuck in a world where everything is based on the media. It's all based on what politics does. When renters start to get evicted, it will start making the news cycle change. That will affect other real estate agents. It will affect homeowners who are thinking of selling. Because the reality is consumer confidence is right now at about 70% who believe we're in a bubble, that it's not the right time to buy. Okay, what happens when renters start to get evicted, or the interest rate goes up and prices start to come down, or days on market start to go up, right? Do we just lie to anybody who's trying to sell to their house? Because once market corrections start to happen, they tend to keep going until they find, their equilibrium. Number 3, FICO reporting is coming back online. It has not quite yet done it. It'll probably take another 30 days or so, but it is slowly but surely coming back online. And we got 1.6 million people that are going to have things on their credit report that they're not going to like. It's a thing. People who took forbearances, who missed payments, did not have any negative things put on their credit. I don't know how they did it. I don't know how you turn off the FICO system, but throughout the pandemic, we did not do a lot of reporting to the FICO system. And when we came out of it, or started to come out of it, you can go check the news reports on this. One of the things that I know for a fact that they tried to do was make it a government regulated system. And the response out of the banks was, okay, if you do that, then we'll find a different way to report. Because the fear of the banking system is that they want to reset FICO scores. They don't want people to be reported late. Let's talk about renters and everybody. Rents not paid are going to go on people's credit report so that they don't rent again, right? Evictions will get put on their credit. Collections will get put on their credit. Forbearances are going to get put on people's credit. That's a big deal. And that really won't look too good on jobs reports or credit reports or economy or whatever report they're using, whatever numbers to make. Government reports to me are such crap. I'm a big guy who likes looking at the actual spreadsheet and seeing the actual trends and the numbers. Number 2, foreclosure reporting and filing has increased. We were talking about this before we started, and indeed they have. They have increased. We're at about 25 to 30% of the market, depending on where you are. You can go on Realty Tracker Property Radar and look at a national overview, and you'll see that it's rolling out from the East Coast. It looks like New Jersey's on fire. But yeah, it's coming back online, slowly but surely. And number 1, the government failed to fix it. They're not going to fix this. This is like everybody's answer. The government will fix it. All right. So they had $46 billion to save renters, technically homeowners as well, but you had to make less than $99,999 as a household. Because apparently, if you make $100,000 or more, you don't have a problem. It's those that are less fortunate. So I understand that, and I accept that. They couldn't get that money out and basically gave up somewhere. So now there's, I think, $42 billion out there floating around in space that I'm sure will get reallocated to something rather ridiculous. Not my place. I'm not a right wing or a left wing or an anything for that matter. I like to believe myself as a free thinker who can actually do math and watch the news without any slant. You need to monitor these 10 things if you're in real estate. You want to look at days on market going up or going down. You want to see value of property continuing up or coming back down. You can track all these things on realtor.com. They will give you real-time analytics on their data page. So you want to look for those 2 items to know if a market correction is coming in your market. What you're looking for is more property coming on the market. So if you're asking me which city is going to show a correction or a crash first, it's Boise. I said it correctly, Boise, Idaho. Their days on market, the number of properties coming on market. So yes, there's a deficit in some cities of listings. In some cities, like here in San Diego, there's a little bit of a deficit. In some places, there is not a deficit. So you got to keep an eye on all those things. And I would recommend, again, realtor.com to keep an eye on those items. Now, let me give you another bonus 10. One of them needs to be corrected. But these are the 10 things that I'm keeping an eye on. Number 10 is Evergrande. I don't know what it means for them to go bankrupt. I don't know what it means for China to bail them out. I don't know what it means for real estate in general, but I tend to monitor every single report about the large, what they called, somebody compared it to the JP Morgan Chase of China or something like that. It's a very, 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 very large consortium that has real estate interests even here in the United States. Number 9, jobs report and income from jobs, right? So here's the reality. They're saying that we have plenty of jobs and unemployment's only at 4.6%, but that's actually not the right story. If you look at the long term, we're actually down about 3 or 4 million jobs, and they've actually wiped that out of the line because those companies went out of business. The number is actually double what it should be. All you have to do is go a little further into the story and see how they're shaping the numbers to effect. And the reality is we are well below what those people should be making to support, these purchases. That is a real problem. And it's going to be one of the things that actually makes this into a crash and not a bubble. Number 8, the supply chain shortage. Hope you stocked up on toilet paper and or lettuce. I'm an iceberg lettuce eater, and I've seen a definite shortage in my iceberg lettuce. This is a thing, right? So that means goods and services, heating oil, whatever, coal, I guess, everything will increase exponentially. If you keep increasing because of a deficit on it, number 6, you're creating hyperinflation. Number 7, maybe I should flip-flop those. Michael Burry, you guys should track him. In 2006, he is the man who predicted that market based on the movie The Big Short, played by Christian Bale. He's betting against the market. He says it's hyperinflation. He says it's an everything bubble. And he says everything's going to crash. What he's betting against is the 10-year bond and the 0 interest rate. Well, they've already said that on November 16th, or in November, starting November 1st, they're going to quote unquote taper the interest rate back up. Well, every time they try to taper that 0 interest rate back up, the stock market tends to respond by crashing. So if they bring it up, the stock market crashes. If the stock market continues to fall, that will have an effect on everything. And God, we're talking macroeconomics now. Everything's overvalued. So number 5, where did the news reporting go on the moratorium? I'm watching the news every single day for any talks. There is nothing except in the local markets and nothing on the national news. Number 4, if this wasn't so bad and there weren't so many defaults and nothing was, why are the banks being so quiet? Let me explain. Banks want you to borrow money, okay? They're in the function of doing that. And they generally lie to you that they're wonderful people that, want to give you money and they want to hold your money in a very simplistic term. They hire people like me to collect that money when you fail to pay it. And we do it exceptionally well. They have not said a word about what's going on in the banks. If there wasn't a problem at all, I guarantee you would see constant press releases of what's going on. The only thing we've gotten is out of Jamie Dimon, who was on that presidential call or presidential Zoom meeting or whatever the hell that was, that they had their little roundtable about, item number 1, right? And extending the everything crash bubble thing. On there, Jamie Dimon said something very important that I think you all need to be aware of. This is all very fragile and it could all change dramatically. Right. That's why Wells started cutting off credit lines, why they stopped doing car loans. That's why the other banks have followed suit, cutting off credit lines and stopped doing car loans. I'm going to change this. Car loans are what I'm tracking now, right? People can't pay car loans. Student debt is at the highest it's ever been. Like, these aren't things that the government can just wave away. The number 1 product they were using to move money around in the banking institutions were car loans, and they've been defaulted on for quite some time. It's kind of a problem. Now it's bleeding everywhere. We have no money coming in. We don't have the same companies that we do. Number 2, the 0 interest rate. It's going to taper. You guys are going to want to start watching what happens to the stock market in November. We are here. This isn't somewhere off in the distant future, which takes us to number one, the everything bubble that Michael Burry's betting against. They've put it off till December. They want to print $1 trillion coin if they have to. We're in hyperinflation. Everything is overinflated. There is going to be a market correction. There will be no taper. It will not be as simple as a correction. It's going to be a dramatic drop because we had a dramatic climb over the course of the last year. And that's the truth of where we are. So, does that work for all of you? Do you have any questions at this point as a group? Let's see. We'll take a couple of questions real quick here. I was working at Lions in 2015 and had something on Warren Buffett on the market, printing money and housing economy. Yeah, you can't keep printing. This is what China does and what we're doing. You can't keep printing money. It devalues the dollar. And that's what we're seeing in hyperinflation. Tina Herman, will you please send a link? I am on a phone. Yeah, I will send it out, Tina, afterwards. Did I not send a link to all of you guys? Did I ruin that? I didn't send it to everyone. Here's the link for everything I talked about earlier on. Now you got me depressed. I'm sorry, Ken. Would you like me to tell you how to turn this into an opportunity, Ken? Jeffrey, what is going to change in the next 2 weeks? More on that, please. Oh, yeah, no problem. They're going to start the Fed's going to start tapering off the zero interest rate. That's bad. The market has not responded well to that. Would REOs become a thing again? No, they will never become a thing again, Claudia. There are too many people who will buy once it becomes an REO. It's actually been a problem working on properties. But that's the reality. No, we're not getting any REOs. I'm really actually sad. I started in the REO, well, I've been through multiple cycles. When I did it, we had REOs. You could buy them from seconds, thirds, fourths, fifths. Yes, in 88, you had fourths, fifths, sixth. Beneficial was a complete subprime third, fourth, fifth lender and would make loans on crap for days. No, they're never going to come back. They're never going to come back. It's all over. It actually forced those agents to move over to residential. It is a portion of the market that was taken away. And if you look at it mathematically, because I watched this all happen from 2007 forward, it actually took away listings from all of you. Nothing went. Distressed homes don't become public sales. I mean, the best case scenario here is that, let's go with 50% of all of these people who've never been in default, who have no ability to pay, are made able to sell or they decide to sell their house, right? So the way this is all laying out, there are approximately 2 million people that are in default, right? There were about 300,000 or 400,000 before the pandemic. Those are the people that have come online right now. We're starting to get the first wave of the 1.7. So of that, you got to look at a number like 2 million, plus or minus. It could be a lot more because everybody's played it so close to the chest. 1 million of those people is the estimate that will actually sell it. And what we're seeing, because I do coach people and I do marketing, I do marketing for distressed homeowners right now. I have a coaching group. I've had it for quite some time. People are selling. It's not a hard pitch. They're not looking for loan mods. They're not looking to say, they're selling, and they're selling quickly. We're seeing a very fast turnover with just a couple of contact points. So from first contact, you're looking at about, the quickest I've seen is about 3 weeks. The average is somewhere between 3 and 6 weeks if you're being consistent with your follow-up. And that's where we are. Joanne, what about HUD Homes? What about HUD Homes? So we have tranches again, and there's a real big problem because Ginnie Mae was buying up paper. So here was what was happening. There were no subprime loans made. Wells Chase, B of A, US Bank didn't make subprime loans. They lent their money to B tier, like the Quicken loans and the people that would make questionable loans, right? So they lent their money on a short-term loan to those people. They lent that out to everybody who continued to buy as the interest rates go up. And then they turned around and sold their paper to Ginnie Mae. Ginnie Mae is trying to introduce a 40-year loan mod on their products. And the only ones that seem to be affected are VA and FHA. Now, I'm going to teach you something that I've taught all my coaching students, and please write this down if you must. People who don't pay, don't pay. In over 30 years of doing distressed properties, people who don't pay, don't pay. I don't care if you give them a loan mod. I don't care what you do. You can let them live there for free. They're not going to pay. I don't want you to pay us for a year. In a year, I want you to start your payments again. That's basically what we did here. People are not going to pay. Okay. This is not going to change. We've lost 3.4 million jobs plus or minus. No matter what truth you want, there's no more income coming in. We're at the very beginning of it. The Fed's going to start tapering that zero lending rate. This is a real problem. This is a very, very serious problem. So, Jeffrey, where are the hedge fund managers buying homes with cash? They're buying everything they can right now because they will always continue to buy. They don't care. And I would ask the same question. Why did people keep buying in 2006 at the top of the market? Got an answer for that one, Jeffrey? It's a good one. Why did people buy at the top of the market in 2006? Now, if you're looking for my real answer, people will continue to buy, including investors. Investors are the number one product. But if you don't think that if the market starts, when, not if, and it is market by market, but when the market starts to correct itself, right, it will become a thing. And people will do strategic defaults. There will be short sales again. It's inevitable where the market is going. There you go. Anybody else? Would you like to see how to meet him? With your permission, I would like to show you what's going on, maybe introduce you to my why and how to get in front of these people. It's an interesting world. I know people avoid it. I'm sure you guys would rather me talk about probate or some other data source in real estate, but I would like, if it's okay with everybody, show of hands or a yes or two. I would like to introduce you to what the real problem is and the solution from my perspective. Thank you for those that raised your hand and want to see it. If you don't, you're free to leave, but I'm going to show you my stuff, my way, the way I do it over the next 20 minutes. There you go. So 95% of all the people in this world suffer from the same problem. Everybody here on the call, I do myself as well. I have a fear of being able to provide. Why is that? Because of this little thing. I have a why. I'm a divorced single dad. It is the bane of my existence to be able to provide for my daughter. It is the only thing I care about most of the time. And I have watched her grow up, and I have taken that responsibility very, very, very seriously, even to this day. The people that you're about to work with, all of you here on the call, you have fears. You have fears that what you're doing isn't going to work out, that the market will correct. I think the number one reason people disagree with me so much about the market correction is your fear of not being able to provide in real estate. If the market corrects, you have to adjust. I'm just telling you, I've got an easier way for you to get in front of people who need to sell their house. I'm going to show you that. I'm going to show you that simplicity. In 2010, I created a product called Monster Marketing. That's how a lot of you know me. This is what got me named one of the top marketers in America. It's what got me named as an expert on the topic. It is unlike anything else. I deliver advocates directly to homeowners that are in distress. It got me named a bestseller, got me on all the different news sources. To me, what's more important, I was able to help about 1,000 agents, and I was able to help my own family as well. I would like to give that opportunity to all of you, and I'm going to show you exactly how this program works and some of the stuff we're actually working on that's getting ready to be released. Actually, tomorrow, I'm actually doing my first test for some of my students. I want to show you behind the scenes on how we get in front of them, what we say to them, and what we give them. Understand, mentors have mentors. These are the 3 books that I lean on these days. I do live and die by the 4 agreements. A man I'd like to call mentor and friend, Don Miguel Ruiz, wrote an amazing book. And trust me, I think it would help many of you out, especially if you're going to work distressed properties. I am a Seth Godin disciple at the end of the day. I am a permission-based marketer. I do not spam. I do not cram. I let the homeowner make the decision. Last but not least, Rhonda Byrne. Real estate is singularly the most negative place that I've ever lived in over the last 30 plus years. It seems to be an association of people who compare themselves to others. I don't compare myself to anyone else other than myself and whether or not I'm progressing on a day-to-day basis. Be the best at what you do for you. You are your own business and you are your own brand. Meditate, manifest, be direct, go out and achieve it. All of these things have led to this moment where I have built a brand new system. It's the Home Advocates Academy page. And we have 3 training modules on it. I'm going to show you marketing. Everybody stay. The first one is our Home Advocates overview. We have videos that teach you how to use the overall system. We have a Home Advocates community. That is our live question and answer. Fortunately for you and those that are going to invest today, we have a smaller number. I think we only have about 115 or 120 people right now. We do answer all of our emails. This is a mom and pop organization. Our goal is to help 1 million homeowners and help 1,000 agents. Once we get to 1,000, I'm capping it. I'm not hiring people. We run it with a very small crew. We consider the people we work with as family. And last is the hub, and that I am going to talk about. The hub is the center point for everything that we do. On the hub, we have our 12-step program. Some of you may know it as the Monster Program or AMS. We have what we call our face-to-face method. Our coaching calls are archived there. We do 3 coaching calls per week. We do a marketing call on Tuesday. On Wednesday, in fact, tomorrow, I am releasing a brand new marketing piece that I'm going to show you guys on this call for being on this call. I think I have the slides in here, but I have figured out another way to do the 12-step program, probably a little more automated, but we're going to test it with our own group tomorrow. We're going to hand out those marketing pieces. Pretty amazing. We do a Wednesday coaching call and we do a Thursday coaching call. Wednesday is Q&A and I record a podcast and do all kinds of stuff. On Thursday, it's with our CEO, Derek Kelly, Coach Kelly. Coach Kelly does scripts and conversion. Let's face reality. I am sort of a know-it-all prick and I own it. And I'm not really good at rejection. So when I meet with homeowners, I don't think necessarily that you want my approach. I think you want to learn how to create trust and likability and create a connection with them. I've gone to great expense to get somebody to help you achieve that. He is the one that will help you with your one-on-one as well. He's really kind and understanding and not short-tempered, angry bank person like myself. We have an express buyer program. So you take the listing, we let you have more of your commission. We have investors that will pay fair market value, to answer your question from earlier. Next, we have an investor program. We do take investors. I don't care if you have a real estate license or not. I do not have a real estate license. I don't think it's necessary to do real estate transactions. So when our investors get a deal, we have a portal, they enter it and I tell them what they can do and how they can make money from it. And if that means referring it to an agent, we refer deals back. We also have a funnel that takes people in directly. We'll talk about it in a minute. We have books and audios. We had some people have surgery recently in our coaching group. So I created a category where they can watch movies and audiobooks that I find that are important for the group. We, of course, have my complete 10-year archive of marketing pieces, all of which got me named most innovative marketer in America for 10 straight years. Everything I've ever created, all the versions of my marketing pieces are all there. And of course, over 1,000 hours of training videos. Our video archive is pretty extensive. And between David Bartels and myself and other partners and other speakers at other events, we've kept it all and we share it all. And last but not least, a little bonus, we have white label books on the subject of distressed properties, as well as the generic real estate books. All of the books have been named bestseller. So when you join our group, you can download these books, make the necessary changes, and send it out. And you can let people know that you're named a best-selling author. Congratulations, kind of a bonus. We're getting ready to add a couple more modules into the hub. I don't like to talk about them until they're done, but this is our base program. And in fact, the price is going to go up when that happens. So let's talk about our face-to-face method. And let me show you a couple of our marketing pieces. Any of you can do this. This is really simple, right? We call it a talk it up system. This really comes out of the difference between me and Derek, right? When Derek goes out, he chats up people and he seems to get transactions and deals. For me, when I go out, it's not quite the same. When I'm out in the suit, people stop me and ask me what it is that I do. And I'm sure you guys encounter this. The big deal is someone asking you what you do. So get out your pen, your pad. I'm going to help you guys right now. And I'm going to help you guys get new clients with what I'm about to tell you. And I'm going to show you the steps that we do it with our students. This will work when I'm out with my daughter. It'll work when I'm dressed in this ridiculous banker outfit. And yes, I dress like a ridiculous banker quite a bit. It's either t-shirts or it's banker. I don't think I have an in-between button. I don't, in fact. All right, you ready? The goal is to get someone to ask you what you do. I don't care how you do it. I don't care how you start. I know that if you talk to 5 people, you'll get 1 lead. We've run that challenge, so I know the exact numbers. I want somebody to ask me what it is that I do. And I say the following. I fix broken real estate. That will garner the second question. What do you mean? I work with distressed homeowners, people who've missed payments, or because of COVID, people have taken out forbearance agreements and they don't actually realize that they're actively in default. That's a big deal. And that's when I pull out our Home Advocates business card. Here's why. All of you that invest today, you can get one of these. You can put your information on it, or you can use Home Advocate information. It's got a generic testimonial from one of our clients who called Home Advocates, and we were able to get them out. And then it has the 800 number, our website, and our generic email address. Everybody who signs up, everybody who invests in us, you can use our 800 number, you can use our email, you can use our mailing address. The move that I do, that I teach everybody, is I write my cell phone number on the front. I say, hey, if you or someone you know has got any problems, here's my cell phone number. Then I want to persuade them. This is my second move, and I recommend it to everybody. Most of you don't have websites, and that's really what's holding you down from getting additional listings. I've taken care of it for everybody who invests. I tell them to pull out their phone. Right. Pull out your phone. Everybody's got a browser on it. I want you to open Google. Feel free to follow along for everybody who's on the call. Open up a Google browser, and I want you to type in the words Home Advocate. What you will see on line 1, right there underneath all this stuff, right here, line 1, distressed property solution. And when you click on that link, like you all are, it will take you to our website. I'm going to show it to you right now. Here. All right. This is the front page of our website. All right. I'm going to drop you right on it. All of our agents are listed right on the front page. So if we receive an email, if we receive a phone call, we use a system called Grasshopper. We're able to forward any calls to any of our agents. We're able to forward any emails. So this is unlike any training program ever. I've never seen it where you guys are listed on the front. I've never seen it where you can use their 800 number. And you're basically getting line 1 of a Google search for Home Advocate. We're above government programs. We're above organizations. We've gone to great lengths. I've done a lot of work as a marketer to make sure. I do all the marketing and I do all the SEO for my company. The biggest thing when we launched was to make sure that we had line 1 when we launched. And I'm very proud of that fact. So takes us back to the hub, which is the reason you're here, the 12-step program. It's very exciting. I'm going to tell you what the 12-step program is. I'm going to show you what it is. This is exactly, I'm sure Derek will probably go into greater detail when you sign up. Again, follow that link that I sent to everybody. There is a gift if you sign up, and it will end when I end this webinar. So if you are a student upgrading, it's a one-time fee. Everything is a one-time fee. I'm just telling you right now, if you're already in and you've mentally like, yeah, I'm doing whatever he says, go sign up, because there's a free gift at the end of this that will end at the end of this webinar. All right. So number one, let's see if any of you can do this to get in front. I don't know what you guys are doing to get your listings. I believe that this is the easiest way possible. So number one, you send us your initials, you let us know that you're going to go out, let us know what cities you want, and we send you leads. We actually send you a batch of leads. Actually, Derek does, and he's very understanding. You're going to order something called an Avery Label 6464. It is a repealable label. I'm going to show you why. You're going to download the marketing piece. On that piece is going to have a phone number printed. That's what it looks like. It is basically a delivery label, right? Real simple, real simple. You're going to pick out 12 properties from the list of stuff that we sent to you. Once you have done that, you're going to set up a driving route, right? You're going to prepare your marketing piece. You're going to write their last name. You're going to write a tracking number. And then you're going to follow the route, go to house number 1, get out of your car, go place this delivery label on the mailbox. That's it. Don't knock on the door, outside of the mailbox, front door, garage door, and not with a permanent label. God, I just got that call, right? You're not doing 100 houses, you're doing 12. It'll take 1 hour on Monday and 1 hour on Wednesday. Here's why. I am not a big believer in working harder. I am a big fan of working smarter. I saw a very big coach actually chastise the students on a video saying that you need to commit to 40 to 50 hours of hard work to get a listing each week. That is the biggest load of crap I've ever heard. It's because the marketing method that they're trying to teach doesn't work. They're using, 100-year-old techniques. We don't do that. 1 hour on Monday, 1 hour on Wednesday. Put 12 up, put 12 up. You will get appointments, right? You're not going to knock on the door. You're just going to go home and sit. You will get an email from me. I review every lead that comes in. I will send it to you, right? When you do, step number 12, you're going to download. We're going to talk about this in just a minute. I think we have about 5 minutes so I can show you some more marketing pieces. You will get this email from me. This will be your appointment. We have a call center set up. We will disclose that you are an advocate coming over. What you're looking at is just an hour's worth of leads that came in all over the country. When you get this, it'll be set up on Tuesday or Thursday after 3 p.m. No, you can't really change it. No, you don't call them. You just go. That's why I only want 12 on Monday and 12 on Wednesday. You don't want 100 appointments, right? You won't be able to get to them. So I'm going to show you something from the lab that we just got. I just got the final prints back on Fiverr. What you're looking at on the screen are postcards. These are not the finals, but it dawned on me that we could do postcards with mortgage companies and with title companies that send out postcards for free, right? So why wouldn't I do that and then send them to all the notice of defaults, add a tracking number, the name of an advocate in the area that they could actually call, or send them back into my call center. We're testing it tomorrow. For those that invest today, you will be on a coaching call tomorrow and you will get these marketing pieces. They're in my computer right now. And I haven't told my students yet, but you have to be on that call to be on the test team. And it's a really simple way. If you've got a source for postcards going out, it'll work just like the other marketing piece from the 12-step program. Once you get face-to-face, right? Let's talk about this for a quick second. I got 5 minutes. We're going to go about 5 to 10 minutes. I'm going to do scripts real quick. Normally I would cut it off. Let's do some more bonuses. I'm going to show you the actual script. You can download marketing pieces on that link that I sent you as well. We do 3 coaching calls per week, Monday, Tuesday, and Wednesday. Tuesday, Wednesday, and Thursday. Thursday is the scripting and conversion call with Derek. Tuesday is always marketing with me, as I said, tomorrow, handing out those brand new postcards that I just got back on Fiverr with all the changes. There's actually 2 different fronts. I'm really excited about it. And then on Wednesday is general Q&A. The investors get on. There are a lot of good questions. You get a 1 hour one-on-one with the company, with Derek. He'll walk you through the entire system. On that call, I would recommend that you do a little bit of role play and start talking about first contact to final action. And the final action you care about is somebody selling their house. So let's talk about the timeline. When will it happen from first point of contact? It will happen right there. It could happen in 3 to 6 weeks, which is the average, or it could happen in 3 months or 6 months. It's about building a funnel and following up, right? And if you can't, then you send it to us and we'll follow up for you. But so far, everybody's doing it on their own. So those marketing pieces that you saw on that link that I gave to all of you for being on the call, here is the script when you go on an appointment, okay? The reason I gave it to all of you, I am trying to help 1 million homeowners. And if you just target homeowners and follow this script with my marketing pieces, you've got a better chance. The reason our marketing is better at getting face-to-face with people who don't answer the phone, and don't answer the door is simple, right? We use permission-based marketing. They set the appointment. They know why you're coming over. But for those of you, for whatever reason, you want to wait till the market actually turns, or you want to go test out the scripts yourself, use these scripts. And I'm going to do them verbatim. Step 1, you're going to go to the door. And for anybody thinking that doing distressed properties is hard, you just have to be able to do this. Hi, my name's Lee. I'm a homeowner advocate. Are you aware that your house is actively in foreclosure? I'm going to hand them a copy of their notice of default, notice of sale. Simple. They'll say yes, they'll say no, they'll say maybe, and they'll say, I didn't know. Doesn't matter. I'm a homeowner advocate, and part of it is our community outreach. We go around and we teach people their alternatives to foreclosure. Hand them a copy of the alternatives to foreclosure. You guys can download it, and I hold it, right? Is it okay if I read them? Nobody has ever said no. No one. No one has ever gone to the door. They'll either stop it from the beginning, but once you get past the first part, no one has ever said no to wanting to hear the alternatives to foreclosure. They'll stop it before you get to script 1. So you'll either know right from the beginning, but if you get right past the first script into the second script, they will hear it. And you just read them. Those alternatives to foreclosure I gave you have explanations for everything. You do not have to be me. I work with you. If you need me, I will talk to them to explain it. So option 1, do nothing. Option 2, pay off or refinance. Option 3, reinstatement. Let me help you out for those watching this at home or from the office. Those first 3 are all about having money, and they don't exist. Option 4, partial claim. Another one about money, which they don't have. Deed in lieu of foreclosure. This is kind of popular right now, and I'm still not sure why people who have equity in their house would ever do a deed in lieu of foreclosure and take $5,000. That is a thing. Number 6, bankruptcy. I don't see a big glut of bankruptcies happening. I see people doing option 9 more than I see people doing option 6 right now. And that's to your advantage. I'm jumping ahead. Number 7, loan mods. Not a thing either. Number 8 is a thing. Okay. 1.6 to 2 million to 3 million, depending on whose story you listen to. We won't know. It's going to roll out slowly. We will find out how many forbearances. You will be able to pull them up. I have talked to people who do loans. They have seen forbearances on credit. It will affect your credit. It will affect your ability to borrow money. Number 9 is the reason you're on this call. I'm not naive. You're here to take care of your family, right? I get it. And I take that responsibility seriously. The dignified solution is for them to sell your house, for them to sell their house. 50% of the people you will meet, actually it's higher, 75%. So far, it's even higher than that. Right now, 9 out of 10 people that my agents are encountering are going to have title transfer. They'll either do it or the bank's going to do it for them, or they'll do a deed in lieu of foreclosure. You need to show them that they have equity. You need to give them the dignified solution of being able to take that equity out. And because you're selling the house, it's not equivalent over the amount of commission. So we want you to take 6% commission. Then we want you to bring that deal back to us so that we can give it to an investor. And we want you to make 5% of that 6% commission you wrote up. That 1% goes to home advocates for processing and use of our iBuyer program. So you have the potential of making a 5% commission on each of your transactions. Now, if when you get to option 9, they do not do it, what you're going to do when you get to the end of reading all this, right? The $1 million closing line. I just have one question before I leave. I want to know what the bank did to you. People don't take responsibility for the things that they did. They never do. And they will tell you. They'll blame the bank. This came out of one of our masterminds. Can I bring you back some information? Can I show up again in the future? I'll follow up, and they will. You're positioning yourself as an expert. If you need me, I will talk to them. I'm not going to close them. I will educate them if necessary. You're going to go back and you are going to educate them and continue to engage and deliver additional information. You can pull it out of the archives. Then on the second appointment, you're going to ask the big question. Have you thought about what you're going to do? No matter what they say, except for selling, all you have to respond is, I understand, and I hope that works out for you. I just have one question before you go. What's your plan B? Understand, for everybody on this call, you are the plan B. Easy as that. And keep following up. We're seeing that it's somewhere between 3 and 6 follow-ups with clients, right, over a couple of weeks to get to listings. Some are longer, some are shorter. You will meet people right at the door, but the average is somewhere around 3 to 6 weeks of follow-up, and you need to follow up. And if you can't do it, you need to let me know, and you need to let me help you follow up. And that's it. So we have the 12-step program, the face-to-face marketing. We're putting you on the front page with an entire organization and Lee Honish behind you, coaching calls, an iBuyer program where you can have an investor program. So if you're an investor or you want to do it as a flip or an assumption, we'll help you with that as well. Of course, the Monster and AMS system archives going all the way back to 2010, thousands of hours of training and video, and of course the white label books. All of this is for you. So how do you join Home Advocates? Click on that link. You can invest a one-time fee with no monthly fee. That's right. I don't want a piece of every single deal you do. I don't want a monthly fee. I just want the one-time, basically it's an onboarding and training fee. We provide the listings. We provide the call center. We provide new marketing pieces. I'm releasing 3 major marketing approaches before the end of the year. We're going to test those postcards tomorrow. So when you invest, you will be part of that, and I'll explain how to do it. If you're a previous AMS, Monster, or, and this is very polite of me, short sale genius, I will upgrade you. It is the link right below. So our CEO, who's in the other room, is the guy who's fighting me off. If you were to go to the front page of our website, I'll show this to you because people think I'm making this up, right? So here is the actual homeadvocates.academy page. When you sign up, you will get an email, you'll fill it all out, and then you'll get something called your library, and you'll get these 3 pieces, right? When you are looking into the product and you go to homeadvocates.academy, I believe it's line 2 in the Google search right now, which is really amazing. And click Get Started. This is for our web funnel. The program is $49.97. I make $500 an hour when I consult. I only do 10 hours, and it's a cut and dry, flat thing. If you wanted me to come in, I'm telling you I put it into my program, and I'm telling you I don't have that many students. And we actually did some stuff on Friday where I pledged for people who sign up, I was going to do an hour of helping them with marketing and setting up business plans. So here are the bonuses for people who sign up before I turn off that are really important, right? You're getting 66% off. That's because of the guy in the other room. He wants you to have a discount. I don't want this discount out there because I'm about to release a bunch of stuff, but he's been keeping it at basically when we started the company's price. If you're a previous student, it's a one-time upgrade fee of $9.97. And of course, you're in the program for life. If you're a Monster student, you want to stay Monster, Monster is still in place. Send me an email. I haven't changed anything. I promised it to you. You stay there. Of course, the downloads that I talked about are also there. We give you the leads. We tell you what to do. We tell you how to do it. We get you in front of people. And this is the most simple thing that I can tell you. It's 100% guaranteed. If we don't get you face-to-face or Zoom to Zoom because of COVID, we will refund 100% of your investment, no questions asked.